Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, folks. Kicking into the summer. Make it a great one. Let's take a look at one of our Believe cards. This is by Walter Anderson. Believe in something big. Your life is worth a noble motive. Yesterday's gone, tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We had the Dow Industrials up 88, NASDAQ up 25, S&P's up 11, gold contract flat at $1,253 an ounce. Silver at $19, platinum up 6 at $1,452. Oil up 27 cents, traded at 102.78 a barrel. Bonds, we have the 10-year down 5 ticks at 124.11. 30-year flat at 135.11. King dollar up 37 ticks at 80.44. The euro down 18 at 136. And the yen flat at 102.52. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? You broke topside yesterday, did 600 million, did 600 million today. Bottom line, if we take a look at the SPY, yes, this market wants to go higher. The SPY yesterday took out that small swing point of a small ABC up. You're taking out the larger swing point, no volume. You have it on the daily, not in the weekly. What does that set up? The SPY, the A point is 186. Your B up there is 192. And so we're talking about 6 points, and 6 on top of 191 gives you the 197.97. So basically 198. That's where that baby wants to run into. On air, no doubt, but that's where it wants to run. NASDAQ Composite. The Composite is at 43.21. The swing point that it got over and into today is 42.86. Lighter volume, that's saying that the NASDAQ is going to get up to the 4344, which was the swing. 4344. Yeah, that's another 25 points. Small caps. And what I'd key off, folks, are the small caps. The small caps, no doubt, were the weakest link. They hadn't moved until yesterday from the downdraft that was created out here at 120 in the IWM, 120 down to 107. You took out the B point, took it out with volume. So your IWM is, the A is 107, the B is 113. You get $6. The C is 111. You get a 118, about 117, 118 print on that right now at 115.88. Gold. We take a look at the gold market. What we have with gold is this. I like what gold did, folks. And we're going to get a commodity expert on any second with us right now, our man, Mr. Andy Heck. What we have with gold is this. So today we did 109,000 contracts. Yesterday, granted, even when I was talking to Andy, you know, gold should have went up a lot higher, but we had some juice behind the move. It rejected 1241, got to 1257. Today, flat. But when it's flat like this, we had an expansion of volume also. I expect what you're going to see, it's going to try to make its way into the 1263 area. If you take a look at the correlation inside the GLD, what you have there is that the GLD rejected lower price this morning, had lighter volume. That's saying that the GLD also wants to try to get back inside the 122.80, and right now we're at 120.61. Tomorrow morning, folks, 9:30 to 11. Our man, Mr. Andy Heck's going to do an outstanding webinar for you. It's on energy opportunities during the summer of 2014. You can come over to our website right now. It's only $99 to sign up. When you sign up, you're going to get a special 7-page report that Andy has done. You're going to get a great workshop tomorrow morning from 9:30 to 11. And if you can't make it live, folks, it's going to be on your page for a... Sorry about that, folks. It's going to be on your page for a full month, okay? Check it out on the front page of TFNN.com. Andy Heck, what's going on?
Hey, Tom. How are you?
I'm doing great. You having a good day?
I'm doing okay. I'm hanging in there, hanging in there.
That's a beautiful thing. And I know those wisdom teeth, you're a trooper, man, and there's no doubt.
It's all right. I appreciate you coming back in. Yeah, I'm just putting the finishing touches on tomorrow's presentation. I have about 28 slides, a lot of very interesting things within this energy market. We're going to be going through oil products, natural gas, and coal, and looking at, some really interesting opportunities that are out there, even though these markets are pretty quiet today. But I reckon some of them won't be this summer.
Yeah, no, I agree. I mean, we know, well, listen, I think what everyone knows is that markets don't stay quiet, folks, and they are quiet beyond belief right now. But
Exactly. But there's some very interesting fundamentals going on. Oil of all of them is the one that's just, range bound and feels very managed here.
Oh, there's no doubt.
Exactly. And that might not change, but some of the others, man, and the products, there's interesting stuff. They're extending all over the place, and I really hope that a lot of people sign up, because it'll be very interesting tomorrow, and lots of information, and this 28-page PowerPoint, I'll make available to everyone on Monday who signs up for the webinar and workshop. And certainly I hope that anyone who does, if they have any specific questions, email them to me and I'll try to fit them in. But it'll be an information-packed 90 minutes, that I promise.
And we know it's so cool. There's no doubt, folks. A good Saturday morning. You'll be done by 11 o'clock Eastern time. If you're where Andy is on the West Coast, well, guess what? You're going to be done by 8 o'clock. Just get up early.
Exactly.
Get out there and enjoy the weather.
That's beautiful. I don't sleep these days anyway, so it doesn't matter. But we're going to go through the fundamentals, the technicals, and as well as the geopolitical situation, the weather which affects some of these commodities.
Let's talk about this a little, because there's plenty of folks that are new every day to TFNN, and number one, you get an outstanding bestseller book out there. Tell me how the Technomento. How you got into that in the first place, and what is the exact definition of that?
Well, first of all, back in 1982, I started trading on a trading desk.
Okay.
And at Philip Brothers, which was, the biggest commodities company. They're like Glencore is today.
Sure.
Back then. And, I looked at charts. On my own. But all of the guys I worked for at that time, and there were only guys there at that time, they were very fundamentally based. They only wanted to look at supply and demand.
Yes.
And that's it. And stand in the middle and basically, make money off seeing the flows.
Right.
And I thought that watching the herd or people, the buying or the selling was important, because there was always a speculative element. They put that aside. So the first time I remember sugar was trading at 2.45 cents per pound. And I showed my boss.
2 cents a pound. What a trip.
Yeah. That's the all-time low.
And sugar, it's 17 cents a pound now, folks. Yeah.
Yeah, and it was 60 cents, and it was 40 cents.
Wow.
And, so it's all over the place. But I showed my boss this chart, and I said, hey, look at this, because it really formed a nice pattern. It based for a long time. It was brutally oversold. I said, hey, take a look at this. I mean, at that point, we didn't have computers, so I kind of did the old Basil Chapman and had my pencil and my ruler, and I had this book of commodity futures charts that I would get each week, and I did all the work, and I showed it to him, and he looked at me. He took his cup of coffee, he poured it on the chart,
oh my God,
and he said to me, I don't buy anything they give away for free in restaurants. I don't care what the speculators are doing.
Oh my God!
So, P.S.
That's funny though. That was funny. They did give it away for free.
Right, they did. They still do.
They still do. That's right. Man, there's not too many things they give away for free. That's pretty cool, actually.
That is true. That is true. So anyway, so after he ruined my chart booklet, which I wasn't too pleased about, like a week later, sugar went it went up 50%.
Oh.
And I said to him, hey, these charts are important. He said, I don't subscribe to them. So I said, listen, I have a very fundamental background. Before I traded, I transported commodities, so I watched the flows. But I said, I have to incorporate this into my trading, this technical analysis. And that's where, fundamentals and technicals equal technomentals.
Put them together.
That's what it is.
And so that's when you... Well, you stay right there, because then next I want to talk about, folks, Andy's got a best-selling book. It's How to Make Money with Commodities. You can go over to Amazon right now and check it out. We're going to talk about the book next. You stay right there. This is Andy Hecht, Tom O'Brien. And tomorrow morning, folks, 9:30 to 11, he's having an outstanding workshop just for you. It's only $99. Check it out on the front page of TFNN. We'll come right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details, and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We're talking with our man, Mr. Andy Hecht, and we are talking the webinar that he's going to be doing tomorrow for you. It's from 9:30 to 11. It's only $99. We're talking about commodities and what Andy's going to be doing, folks, okay? Of course, when we look at commodities, they trade in the future market, but what he sets up is that You have the ETN structures, the ETF structures. These are vehicles that you can trade in the equity markets looking at the technomentals as we're talking here. So go ahead, Indy.
So the book, How to Make Money with Commodities, and
Yes.
it's an important distinction. It's not how to make money in commodities, it's with commodities. And the reason I wrote the book is because most investors really know very little about commodity markets. So
Even though we use commodities more than we use equities. Isn't that funny?
Well, it's amazing. You know what? They're not sensitive. They know about it because they go and buy bread.
Right.
They fill up their cars with gasoline. They heat their homes. They cool their homes.
Yeah.
You know, we eat, we live, and we are all consumers of these things. But when it comes to our investment calculus,
Right.
a lot of investors don't look at raw materials or the price of goods sold
I'm with you.
for a
Right.
company.
Right.
So that's why I wrote the book. And like I said, I called
Of a company, that's cool.
I wanted to call it Essential Investing, but McGraw-Hill wanted to make it part of this series because, Investors Business Daily
Sure.
wrote How to Make Money in Stocks, and this one was How to Make Money, and they wanted to say in commodities. I said with commodities because what I wanted to do was to sensitize investors into looking at each of these sectors,
Yes.
energy, metals, grains, soft commodities, and other commodities like rare earth metals
Sure.
and steel. And what I did was, in each chapter, I kind of break down and explain where they're produced, how they're produced, who consumes them, what really goes into each commodity,
Right.
the fundamentals, and how this relates to stock prices.
Sure.
And how how almost every company out there is buying raw materials to make their finished product. Or even if they're not, if they're transporting their finished product to market, that transportation makes them a consumer of various fuels.
Well, it's wild what you talk about is that when I started the Gold Report, Andy, right, which is 2002, okay? Mm-hmm. I had looked at a lot of different commodities, and because I was at these gold shows, there were other large companies that were there in the metal business, right? And one of them happened to be, two of them actually, Rio Tinto and Valley were there, right? Mm-hmm. And I remember I spent some time there saying, oh, okay, iron ore, right? Iron ore. I'm looking at iron ore. And, I start looking at it, and then I start looking at, both of the equities, and I just happened to start following Valley, right? Uh-huh. And I'm saying to myself, man, and it took me a few years to get my head wrapped around what iron ore was, okay? And iron ore, folks, the bottom line is that, it's steel. That's what it comes down to. Well, make a long story short, because Valley was taken off, it was blowing my mind. It was taken off more than the gold stocks. It went from $2 to $40, folks. Okay,
right.
And it had to do with everything just going into China. And if you see once I got to see what one of those mines looked like, I realized that, oh my God, it's just like sand, folks. It's like sand, right?
It's amazing.
And they send it, and they get a fortune for it, right?
Right. It's iron ore.
Yeah.
Then it becomes pig iron, and then it becomes steel.
I see. Interesting.
Right. So,
okay.
you know what's really interesting? I read an article today. It's on Bloomberg News. It basically, the United Nations Environment Program's International Resource Panel came out today, and they said that global use of minerals, ores, fossil fuels, and biomass, that's all commodities, will reach 140 billion metric tons by the year 2050. And that is very important because, that is so much more. That's it's huge, exponentially larger, 3 times larger than when it was in 2000.
Really?
Yes. So,
and what year did you say?
By 2050.
2050, okay.
Right, so that's three
times in 50 years. Oh, man, that's heavy.
Right. And we look at its population, its
right.
wealth growth,
right.
and it just means that these, for companies, for investors,
sure.
understanding something about commodities and raw materials is very important. Look, the commodities of tomorrow are the commodities we take for granted. Water, air.
Water's a big one, man.
Water's a big one. I mean, I live here in Nevada. Believe me, it's a big one.
Yeah.
It's a big one. The Hoover Dam and Lake Mead, without that, we're really in the desert.
Well, that's Chinatown, right?
Yeah.
Is that Southern California? That's Southern California. That's right.
That's Southern California. Is Chinatown. Right. But, you know, and they have the ocean there and desalinization plants and all that stuff. But, you know, people, 7 billion people on the planet Earth. Tom, when we were born, the number was like 3.
Really?
Yeah. Population growth is exponential. It's just, and we are all consumers.
Yeah, no doubt.
And this is why, the use of raw material. Now, we can go back to that argument. I know you love to bring up peak oil, right? And we're talking really about.
I was never in that camp, by the way. But.
Neither was I, because I think that there's plenty of oil. Yeah. It's just more expensive to pull out.
Sure, right.
And that's the thing. I don't think we're going to run out of resources. I think it's just going to become they're going to become allocated differently. Yes. We'll become more efficient, as we have in oil, and we will find them in new sources. But the production cost will be higher.
I find myself just being more efficient now.
Yes, of course.
Because it just makes sense. And it's like, hold it. Because you're saving money. Sometimes, I put the lights off, don't put the lights... It's small things, but the reality is that, it's like, hold it, man. What are you doing?
Right, but you're a consumer, Tom. You make intelligent choices. And I believe that people make intelligent choices, and that they're very often driven by economics. And that's the reason that often I talk on my show, I talk with you, in my writings, I always talk about intercommodity spreads. We've been watching cattle go through the roof. Yeah. And I said yesterday, hey, this has got to affect hog prices, because consumers are going to walk down that aisle. They're going to look at the price of the steak, they're going to look at the price of the pork chop, and they're going to say, we're having pork chops tonight. And today, hogs limit up.
I know. What's amazing, right? So check this out, folks. I mean, this is a vehicle I like trading. But hogs look to me like this is going to be sick. So 96 to 128. Oh, my God. So you get 32 cents, 42, 48. It looks like hogs could go to 148. 148.
Exactly. But my point here is that the nominal prices that we see, whether it's $1, it's $1.40, it's 90 cents. Yeah. What's more important is looking at one commodity against another commodity's price. Yes. To gauge the true value. That's why I talk about platinum versus gold. Right. That's why I talk about oil versus natural gas. Sure. That's why I talk about corn versus soybeans, because people have to make choices in these commodities. So to just say that the corn price is, where is the corn? At $4.59, okay? That's meaningful, but it's not as meaningful as saying, okay, corn is $4.59, but soybeans are $14.60. What's the relationship to the two, and what have they been in the past? That's important.
Yeah, no doubt. Listen, folks, you stay right there. Andy and I are coming right back. And tomorrow morning, you want an education of a lifetime, folks? Andy is going to be doing it for you, 9:30 to 11. It's only $99. You get a 7-page report. It's going to be on your site for 1 full month, right in the front page of TFNN. Andy and I are coming right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Don't forget, folks, at TFNN, we do 9 hours of live programming every trading day. You can get all that programming right on your cell phone. Right in your browser, you put TFNN.mobi. If you'd like to get Tiger TV, which, of course, gives you all the charts, plus the audio, just go to TFNN.com. You'll see a little box on the right-hand side. Hit that box. Our servers will understand what type of device you're on. You get Tiger TV, you get the audio, you get the video. We're talking with our man, Mr. Andy Hecht. And we are talking about what we use each and every day, folks, meaning commodities, and how, if you understand the commodity market, that you can not only trade the commodity market, but the equities that you are trading, per se, have huge amount to do with what are they selling. You know, if you're selling, well it's Starbucks, whether it's the U.S. Steel, whether it's an automobile company, all of that is hugely.
Or whether it's Walmart.
Whether it's Walmart, yeah.
They're sending trucks all over the country, and you know what they're using? They're using diesel.
Yeah.
Exactly.
Right.
So, you know, it's interesting. You know, Tom, I just pulled out on page 182 of my book. I have this chart, and we talked briefly, but I want to give you put a little meat on the bone, give you some numbers here.
Cool.
So, you know, when we were born in the 1950s, population 3 billion.
Okay.
Today, population 7 billion.
Wow.
In the year one, population was 200 million. It took 1,800 years to get from 200 million to a billion.
So in 1 year, we had 200 million babies?
We're having a lot of babies out there. The world is definitely expanding.
I love it.
2025, they're expecting 8 billion. By 2043, 9 billion people. And by 2083, 10 billion people.
Well, there's no doubt. And this is where, you know, a larger number gets larger very quickly, man.
Exponential.
Yeah, it does.
Yeah.
There's no doubt about that, man.
It's quite amazing. It really is. And what we also touched on were these intercommodity spreads.
Yes.
And I put up a little chart here. And I want to show you this chart.
Okay.
It's the difference, and it's a kind of a little teaser for tomorrow too. It's the difference. It's crude oil price divided by the natural gas price.
Yes.
Okay, so
that's so cool. Okay.
What we see here is we see a nice downtrend here, which means that natural gas is getting more expensive relative to crude.
I see. Okay.
Because natural gas was very cheap. And by the way, even at $4.70, based on production cost, it's still pretty cheap. Because it costs a lot to frack this stuff and get it out. Especially with all the environmentalists who are against doing that. But the point here is inventories in the U.S. are very high now in crude oil because we're a very big producer.
Huge, I know.
I think we're at 28 highs in terms of our production. All right, and what we're seeing here is inventories are very low in natural gas. Based on the last 5 years, we're about 40% below what the average is. So what we're seeing here, when we look at this intercommodity spread, comparing one commodity to another, is that the trend now is down in the spread, which means that natural gas prices are looking a lot better than oil prices here, you know, and they're trending that way. And even the stochastics are telling us that the market is going to continue to fall.
Well, you know what's so cool about this is that when you look at a large macro view, if you and I, or just picture, folks, that no matter where you are out here, picture that you owned, as Andy said, he used the Walmart, but you just owned a trucking company, you know, or the city that you're in, you had a good city council, and all, because there's a lot of garbage trucks that are using, you know, natural gas right now. It just totally makes sense that the natural gas business for the truck fleets is going to happen, and it is happening now, but it's going to start happening much quicker because the amount of economic dollars that can be saved are astronomical. They're huge.
That's right. That's right. And you know how much natural, we don't have big inventories right now, but in that Marcellus Shale, which runs from West Virginia all the way up to the Canadian border,
right,
there is estimated to be over 1 quadrillion. It's a number I can't even put my hands around.
A quadrillion.
Cubic feet of natural gas.
That's
reserves.
So cool.
So we are a we have massive reserves of natural gas in the crust of the earth, especially in those mountains. And, so it's expensive to get out, but at higher prices, they'll go after it. So, it's the same as we've seen. Listen, oil prices, Tom, up until 10 years ago, the highest we saw for the price of oil was $40 a barrel. Right? It's only in the last, 8 years or 9 years that we've seen oil prices, up here at $100 a barrel. And now we're a big producer because we're able to go after this higher cost production.
Yeah, sure. No, so, well, and what always gets intriguing, this is where the larger number play comes into play once again, is the same with gasoline. I mean, gasoline was cheap forever, right? And then all of a sudden, boom. Do you know what I mean? Once it, got to basically, 60, 70 cents, it was a, $1.20 in a heartbeat. And then all of a sudden, you start getting used to $3. It's like, how did that happen?
Yeah, I got an interesting education in gasoline prices. In 1987, Philip Brothers transferred me to London.
Yeah.
And I got a car there. I had a car there, and I was used to filling up my my car in New York with gasoline, and it would cost me, I don't know what I was paying at that time, probably 87. I was probably paying $1.50 a gallon or something like that, maybe a little less.
Okay.
I went to London, and all of a sudden, I was filling it up at $5 a gallon.
Yeah. Right.
And I'm like, whoa.
Right.
Whoa, what's going on
That's right, because they've been paying a fortune forever, right?
Well, yeah, because of the taxes over there. But, people get used to these higher prices. What people are not used to is price shocks. Coffee goes from $1 to $2. Gasoline goes from $1 a gallon to $3 or $2 a gallon. But when they go up gradually over time, consumers get used to paying the bigger numbers.
That's the truth, isn't it? It is. That's a fact.
Really is.
No, it is. It's a fact, because you're going to put gas in your car. Then you got to start making choices. Okay, if I got to put gas in my car, I have one less, coffee at Starbucks. I mean, there's a million, swap offs here that you can do. No doubt.
Exactly, and companies react very slowly, and that's why investors need to be sensitive to commodity prices. An example is something that happened this week. We saw, I guess a couple of months ago, 4 months ago, we saw coffee go from $1.15 a pound to $2.
Right.
Like an arrow.
Oh, it's a rocket ship. Yeah.
Rocket. Yeah. Just it roofed, as I like to say.
Yeah. Right.
And then this week, months and months after the deal,
I know.
J.M. Smucker comes out and says, hey, we're raising the price for all of our coffees.
Right.
So they had some coffee in inventory.
Yes.
But now they're looking to the future, and they can't hedge that far out. And let me tell you something. All of these companies that use commodities, when the prices are coming down, they don't hedge. Because they're always afraid that if they buy it today and it's lower tomorrow, the boss will come out and say, hey, why'd you buy it yesterday?
That's the end of their job, right?
That's right. That's right. And then when the price goes up, the boss comes out and says, hey, why didn't you buy it yesterday? So they're the purchasing managers are in a very difficult situation in a lot of these companies. They're kind of damned if they do and damned if they don't. So,
and that seems that's right across the board. It's amazing, and that's just like cover your butt type of deal. But it's sad, actually, sometimes. You know what I mean?
Sad. It is sad. But for us as investors who have these companies in our portfolio, if we just keep our eye, peeled and watch what's going on in commodities, sometimes it's going to tell us a little something about the earnings for the future. And that's the reason I wrote the book. I didn't write the book for commodities traders. I wrote the book because this is an alternative asset class.
Yeah.
That's what they used to call it, an alternative asset class. I guess over the last couple of years, they've come a little bit more center stage. And I think that commodities will come even more center stage in the years to come as the price levels are higher now and the way that they affect profits become much more important.
Yeah, no, I agree. And, the reality is that it's quite easy wouldn't be the right word, but understanding them is easier because we use them so much. Okay, I mean that's where it really comes down to. Particularly as companies are using them for manufacturing goods. Well, the bottom line is that whatever that input is, if you ever run a business, folks, it's the input that kills you. It's the expenses. You can always make money. It just depends on how much money it costs to make that money. I've seen plenty of people make millions, and guess what? They lose money. I've seen people make $300,000, and guess what? $200,000 is a profit. So
right. And it's very interesting because when you look at a commodity as an investment, if you go to the next step and you look to invest in them, when you're looking at a commodity, there's no CEO or there's no management you have to deal with. It's a more of a global outlook. You're looking at total production, total consumption. It's cleaner in a way.
Well, it's cool. Now, this is when we get back, folks. We're going to talk about coconut oil. Now, we don't trade that, but I just want to give you an idea of this is a personal experience, and this is pretty cool. And Andy and I are going to be right back, folks. You stay right there.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till streams. TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Tom O'Brien.
Welcome back, folks. Andy Heck, Tom O'Brien. Appreciate you growling and prowling with us out here. Now, don't forget, Andy has an outstanding show right here at TFNN every Tuesday, Thursday, 3 to 4 Eastern Standard Time. Coming tomorrow morning, folks, he's going to be doing a webinar for you from 9:30 to 11. If you want to understand not the energy, what we're going to be looking at in the summer, and how you can relate that, what Andy thinks energy is going to do, into your own trading. It's only $99. You can sign up right in the front page of TFNN. When you sign up, you'll get a 7-page report that he did. If you can't make it live tomorrow morning, folks, it's going to be archived. It's going to be archived on your page for 1 full month anyway. So I got to tell you this coconut story, because, you know, Tommy and I, what happens, folks, is that, well, he started doing yoga. I do a lot of yoga. I went down and did about a week of yoga last year in the Dominican. So as we're down there, the Dominican, of course, has huge amounts of coconuts, right? I says, man, what a business this is. And I love coconut oil, folks, okay? I eat it, I put it on, and I just like eating it, okay? So I'm looking at the prices, Andy, right? And you can get the best coconut oil. Some of the best oil comes out of the Philippines and comes out of the Dominican, folks, okay? You get pure organic at about $800 to $900 a ton. It fluctuates maybe to 12 or 13, but the reality, you can get it. I start looking at that number, Andy, right? I'm saying to myself, okay, hold it. 1 tons, 32,000 ounces. I'm paying $16.95 for 8 ounces. If I wholesale them at $7, I get, for every $1,000 I get 28,000 back, right? I'm saying to myself, hey, this is not a bad business. And where Tampa is, folks, we're close to these places. But, you know, I look at it, so I'm playing with it. I says, okay, I'm going to stay focused on what I'm doing, and I'm not going to do that. and so check this out, though. This is really cool. I was just saying to Tommy today, I says, man, I'm so glad we didn't do that coconut business, Tommy, because I just came back from Nature's Food Patch yesterday, Indy, right? Yeah. And what has happened, folks, is that because the spread is so big in coconuts, right, there's this one company that is really doing well. In fact, I don't know the woman that owns it, but one of her uncles worked for us in the real estate business, and he was explaining to me, it blew my mind because I buy her coconut oil. She went from her garage to doing $5 million in sales in something like 14 months, okay? Wow. Now it's even heavier. She's up to 20, 30 million, okay? But check this out. At Nature's Food Patch, the competitor, right, just went from, let's see, at least the 36, about 40-ounce bottle, and they brought it down to $7.95. They just destroyed their price. That
just killed the margin.
Oh, it killed it. It totally makes sense, because it's in this case, listen, anyone could have done it. You know what I mean? It's like, I went to them, I says, hey, how do I get this back? He says, no problem. You just give us the money. We'll have it delivered right to the port of Tampa. You know what I mean? And then you gotta, you have get a manufacturing plant, get someone to bottle them, and if you can sell them, good luck to you. Isn't that a trip, though? And
that's amazing.
Yeah,
that's
amazing. I got a decent. I really dug the idea when we went back into Nature's Food Patch just the day before, and I saw the price get destroyed. I says, "Oh, look at this, man!" So.
Yeah, it just goes to show. I'll tell you, similar. When I worked at Phillip Brothers, I remember one of the when I was a kid, and I started by delivering the telexes that came in, and I remember I used to go to this one department. It was 2 guys who sat there, and you know what they traded? They traded 2 things. They traded fish oil, and they traded beach sands.
Beach sands, ooh, that's worth some money.
That was a big business.
I know that's a big business, man. And that's a business, folks, that's under the radar. It's still under the radar.
Yep.
That's a good business, man. Yeah.
It's a good business. You got companies like Glencore in there and Noble in a big way.
Oh, yeah. Yeah.
I mean, for cement, for all kinds of things.
No, listen, man.
For Phil,
when I was building up in Boston, we still have a lot of quarries in Boston, and I had this Italian guy that was such a cement guy. He was a stone guy, and it was amazing. He'd build these fireplaces, and we would go, and he'd bring me. He taught me so much about it, and he'd bring me to the quarry, and he'd pick out the rocks. And he was always saying to me, man, he says, hey, kid, when you get older, if you want to really make some money, buy a quarry. And, oh, man, it's so true. Do you know what I mean?
Oh, it's amazing. Yeah. I mean, you go anywhere. I go to the Strip, and I walk into the Venetian.
Yeah.
And I look at the floors, the marble and the granite there. And I'm like, this stuff all comes out of quarries in Italy, and the markup on this stuff. Hey, these are commodities.
And it's totally, it is so cool. It's because it's totally non-transparent. You don't. Yep. I'm still struggling right now to thinking about going to go visit a few quarries in South America myself. Do you know what I mean? Because that's a business, folks, that is non-transparent.
That's right. And as every bank on Wall Street will tell you, their most profitable businesses are the non-transparent ones. The bond business.
Huge.
Right.
Huge.
Right. And that's why Philip Brothers went out of business, really. Regulation, but the transparency that came to the markets. Producers and consumers knew for a long time they had no idea where prices were. They needed a merchant to tell them.
Isn't that wild? And it's so cool with you doing this workshop tomorrow, because that, it's cool, folks. Education, technology, as we keep going forward, you can see how this changes the world. Because now what ends up happening is that whether it's some little kid that's listening out there, whether it's someone middle-aged, older, whatever it is, every piece of knowledge that you actually get is so cool. And you know what is really a trip? You don't even have to use it to make money. Just understanding it and understanding how it works is really cool.
Absolutely. Hey, Tom, Mr. Bill in the Den just said that in fracking, sand is the new gold, and he is so right.
Oh, yeah.
Because, when they blow this compote that they put together into these rocks,
little holes.
They're using sand.
Yeah.
And I'll tell you, that's boosting the price of sand. And if we ever start fracking more, sand prices will go up.
Yeah, and so I can tell you from I had this young engineer down here, and that's what he specializes in. And he's making more money than God right now because everyone wants him. And that's going to be happening because what he said to me, I just talked to him the other night. He said to me, Tom, he said, I've never seen anything like this in my life. He says, there's more people, just investors that have money, right, that are basically throwing money at small companies. I'm talking millions, folks, not just to have the map laid out is millions, okay? They're throwing millions at this, so it's just the beginning of this whole deal, man. Do you know what I mean? Because they know I guess the technology's so good, they know that the oil's there. It has to do with how many little tiny holes can he get in there at the same time, and how much pressure can get at the same time, and put it in. Because once the flow starts, it goes. It's a vacuum. That's what ends up happening.
Yeah, and listen, as human beings, we can live without all this paper, but we can't live without these natural resources.
No, we can't. Listen, folks, tomorrow morning, 9:30 to 11, check it out. You're going to get a great education. Our man, Mr. Andy Heck, he's going to get up at 5 o'clock in the morning for you, folks.
That's right.
9:30 to 11. Check it out. It's only $99. Andy,
I'll call you next week after my swelling goes down.
That's a beautiful thing, man. Always remember, folks, whatever you think about, you bring about. Have a great weekend, safe weekend.